Okay. So took another loss. Not nice. Not nice. Not really not nice. However, I did some analysis. I did my analysis, and I've came to the conclusion that probably the skills aren't the issue, but rather the setup, which sounds very weird. But in this case, like if I'm sitting in front of my laptop with a big screen, like I'm just telling you guys, it's way more convenient. Um, you have way more. You're kind of like way more creative, I would say. Not creative, but way more precise. And you think more, you draw more on a chart, whatever. And if you were doing that on a small iPad, I believe that's affecting your win rate a little bit. Um, However, so let me just do a quickly daily recap, a quick daily recap, and then the trade recap, and then the and also while I'm doing the daily recap, I'm also showing you what trades you could have taken, or I should have taken at least, because I was awake at when was it? At 8 a.m. or whatever. Here could have been a trade already. Now today was a little bit different. So as you can see, we don't have a horizontal trend. We have like a little bit different trend. Now we make them all three of that, and I will show you right away. Wait, about here maybe fit one, and as you can see, after that, or exactly at that 1.5, you see that we react and push down, and now we're doing that mall 4. So that could have been maybe not a limit order. Oh, that's a 30-minute. That's also my bad. Um, should have not. Probably could be a limit order. Let me just check. I'm already having new ideas all the time, man. Like I don't even manage to make a video. Oh shit, that could have been a limit order. No, wait. It's a daily. Let me just check. So, nah. I mean, you have these highs, so you might say, okay, yeah, why not? Why not? Yeah, we have almost triple highs. Yeah, you can count that. But I would have taken that off that break, so you can just trade that down. But that was yesterday to the 50 or even more. If the bias is bearish, you can also put it obviously to more at 700 hours. And then we break that. Now what you can do is obviously mall 4. This is our range here. This is the 1.75. You almost touched 1.75. Same thing. I will show you. Oh, that's the wrong side. I'm sorry. As you can see, I mean, you don't have to be that exact. It's just after the 1.5, that's a reversal zone. And then what we do, is we overextend. You can take the trade off of this break here, which would be about here. Take it. You can take it to, that's a chainsaw mall. You can take it to 45. That's would be about here. And then obviously I was looking for reversal. Now I had some problems with my trend drawing tool, as you see maybe from here. That's a little bit of weird. That's a little bit weird, okay? And I'm still really kind of learning how I should do this, because there's three different variants how you can do this. First is this one. This is a horizontal trend. Second one is that manually drawn, and the third one is with that tool. And they all show different things. Now, if you want to be conservative, you can just draw it, and that's what I would recommend most of the time. Well, that's not true. I would not recommend that most of the time, but you're probably on the safe side if you're doing it all the time. But also sometimes the computer is a little bit smarter and can do these levels, or I would say calculate these levels a little bit better. Sometimes I'm really surprised how accurate these levels are. In this case, we didn't really have one trend line. As you can see, when we broke this trade is invalid, which means we have 3 points, 1, 2, 3, which means we have a new trend. Now, especially if we have a big kind of reaction and then a sideways trend, the computer wants to kind of how to say it, really does not care too much about these sweeps as much. It really cares about points like these and these where price accumulated. So we have to keep that in mind, and I'm really not sure how or which levels really are accurate. Should I just leave that out here because it's a high a zone that causes or a move that really was with a lot of volume and thus does not count? I don't know. But I believe if you keep it simple, that's always the best. As you can see here, that's how I would draw it. And now to the trend. This looks like a Model 9. However, on the drawn tool, it was a Model 3. Okay, this is 1.5 extension, and reacted to it, but it did not go to my TP. Just yeah, cooked me. Obviously, if it were, or if I had drawn this trend, I would have not taken that. Or I'd say probably, because there's still this factor in here, and you would see that in this case, this is also interesting, I probably would have still taken that because of a Model 4. A little bit earlier, different trade, but it's still an execution. And as you can see, we break that. I maybe would have entered, or at least at this point I would have entered. Man, like I would have been actually super confident in that. Now, the only thing that I really have seen that could be used as a tool to really like minimize losses might be the CVD. Now the CVD, I don't really know how that actually is calculated or how the CVD is created, but yeah, I have to read into that. But I've seen that it was accurately. I have been working with that a little bit, and as you can see here, when we break that, we did not break it. We did not break on the CVD. So a criteria could be only enter when the CVD also breaks the trend. Okay. In this case, we break it, but we are already over that 200% overextension. So I don't know if I really would have entered here, to be honest, really. Probably would have entered actually. But I'm just saying, that loss might have happened. Losses happen anyways. But this case, it would have been closer to not taking a loss, if you can say it that way. And yeah, that's probably all I've. Yeah, now we push down. As you can see, and also we were at the 45% here, so that's. I mean, I would have entered. No chance I would have not entered, because we were already also on a Model 4. Model 5, 45%. And yeah, this was just too many not too many, but a lot of confluences. And yeah. And then eventually we now push down, as you can see. And yeah, it's frustrating, but losses have to happen. Also, probably is a good learning. If the CVD is now getting a main tool and really causing me to have a higher win rate, then we're all good to go. We can actually test that right now. Maybe let's see if we. Yeah, we already have them all three there, and this would be. I would say this is accurate But let me just check. Maybe I would draw it like that. Yeah, I would probably draw it like that. Now you can copy that, and you can see percent extension. Now let's just pretend we would have taken a limit order because it obviously went to my target, but I would have not entered because of that late break. You would have had a nice reaction. Okay, that's a similar one. And if it breaks on both, you can take that. In this case, we also break it. And here, you can kind of check. What we need to do is we need to check if, for example, it breaks it here, but it doesn't break it on the CVD, if it really continues or not. Now I'm doing that. Why am I doing a CVD video, bro? Anyways, yeah, that was the daily review, and yeah, till next time.